Good evening. Welcome to How to Save $500 with Your Accountant. My name is Michael Thomas. So again, I welcome you to the inaugural Kallangur Business Association information session, How to Save $500 with Your Accountant. So the objectives for tonight, we're going to talk about how we can save some money and some time. We're going to talk about the end of financial year and how you should prepare your business for the end of financial year. We'll cover off on some software and some accounts. We're going to talk about the tax office and their issues around compliance and penalties. We've got some new innovations coming in with small business depreciation, even though that's been in for a few years, but we've got some news on that. And we're also going to talk about single touch payroll, which is probably going to have the biggest impact on businesses, both large and small. And we'll talk about strategies, we'll sum up, and then we'll talk about some future events. So, just a quick overview. My name is Michael Thomas. I'm a graduate of the University of South Queensland. I'm a fellow of the Institute of Public Accountants. So that means that I've got extensive years of practice. I'm also a member of the Australian Bookkeepers Network. My background was 29 years, over 29 years I worked with Defence in the logistics supply chain area. So first of all it was around purchasing, provisioning, and then I moved into the finance for the latter years. I've been a finance manager in Brisbane, Townsville, Darwin, Brisbane. So I've been around the top end of the country. I've been a small business owner since the early 2000s, and I've also dabbled in property and shares. So I hope that at least brings something to the credibility of my skills and understanding. In terms of financial year, how can we prepare for the financial year? Well, obviously things like record keeping, compliance. So we want to talk about completing the bookwork, doing your tax return, and obviously planning for the next financial year. So if you put in the hard work throughout the financial year, your business will end up being better organised and you'll end up working smarter in the year ahead. So in terms of working throughout the year, we need to consider the end of year planning as well. So you need to find out about what deductions you can claim in terms of home expenses. So people that have businesses, not only can you claim the business expense of that property, but you can also claim a certain amount of home office expenses. And if you have vehicle or travel expenses, then you're also possibly able to claim some money against those things. We should try and keep up to date with any changes for next financial year. So for example, one of the things we're talking about tonight is single touch payroll for people under 19 employees. So this is coming out, this is going to have a big impact on business, and it's going to have a big impact in terms of cost in your business, so it's something that you should be aware of. Other things which you could probably talk about are things like changes in the payroll tax rate. So if you've got employees and the tax rates are going to change, then we need to think about those type of things. Perhaps we talked about the corporate tax rate. It's going to change from 30 cents in the dollar down to 25 cents in the dollar. So you've got to work out what you're going to do with the additional funds that may or may not come out of it. We also should think about adjusting our debtors and adjusting our assets. Perhaps we've got some stock that we want to get rid of, or people that are just bad payers. So in terms of the end of the financial year, we need to look at whether we met our targets or not, or whether we can do things differently next year. We should create cash flow to manage our potential shortfalls and ensure that we still have sufficient funds to pay staff and suppliers. Regularly reviewing and updating your plans will help you remind yourself of goals and priorities. It'll help you work out whether strategies are working or not working. Perhaps you're working in an area that's being diversified. So for example, if you're in the hotel industry, suddenly you've got Airbnb coming into the place. If you're a taxi driver, then you've had Uber. if people have disruption, because it could be computer-based, it could be other reasons that things are disrupting in the workplace. You need to possibly look at any potential of new opportunities coming out, and also perhaps getting rid of some of those things that aren't working anymore. You need to prioritise and maximise your effort. Work smarter, not harder. As your business grows and expands, and you decide to change your business structure, maybe perhaps you've got the wrong business structure. You know, in 1979 when you set the business up, it was probably great to be a sole trader, but things have progressed then. You know, we've suddenly got better tax advantages if you're not a sole trader, but not one model fits all people. So getting the right opportunity for tax effective management or dealing with perhaps a growing family is a good reason to sit down and have a look at your tax structure. Check about insurances. You need to make sure that you've got the right insurances in place. Does anyone know what key man insurance is? No, key man insurance is basically where you're a sole trader or one operator and you're the only person that works in that business. And we'll take our colleague here who's the painter. He's up the top of the ladder and he's painting and he falls off the ladder and can't work for 6 weeks. What happens in that case? He needs to make sure he's got sufficient insurance that'll cover him for things like falling off the ladder, so he needs income protection. He needs to make sure he's got life insurance because it could be catastrophic. He needs to have total permanent disability insurance perhaps. So he needs to have just those insurances in place. And heaven forbid his ladder should fall down and smash windows or you know, ding the Volvo or something like that. So things like public liability insurance. So having insurance, it's a little bit more than just, oh, well, I've got to have car insurance, I've got to have insurance on my stock. Think about the biggest asset a business owner has. That's the person that does all the work. You got to read product disclosures, you know. So if you're in a business and you're selling a hospitality product, for example, or working in retail, do you need to put material safety data sheets with it? So you need to protect yourself. Backup and storage of documents. Yeah, what do you do if you're going to have a fire? How are you going to back up your data? You've got a computer system, which is great, but that might be the only place that you've got your MyOb stored, for example. So you need to make sure that you've taken your backup disk and you put it into another area, or either fireproof safe off the premises or give it to a friend, or perhaps redundancy through the cloud-based system using the virtual cloud. There's Dropbox, there's Google, there's you know, plenty of storage places in terms of the cloud. So what's some of the ways that we can save money, for example? So I've just got 5 ways up there. So you're getting towards the end of the financial year, you're at the end of April and going into early May and June, and you say, right, well, I've had a pretty good year and I want to minimise my tax. So what some of the effective ways that you can minimise your tax are things like prepaying your expenses. So prepaying your staff super, or going and buying stationery, or paying for utilities, for water, power, for whatever the case may be, or even rent, maybe paying the rent 12 months in advance. So you get the expense this year and therefore take the pressure off your expenses next year if you're going to have a particularly lean year. Buy something for your business costing $20,000 or less. Now I guess the effective tax rate there is you really only get about 30 cents on the dollar back. So if you spend $20,000, you're really only going to get about a $7,000 tax saving. So don't think that I'm going to spend 20 grand and I'm going to save 20 grand on my tax bill. You spend 20 grand and you'll save about $7,000 or so on your tax bill. Just depends on what your tax rate is. Embrace the cloud. I just spoke about Google Drive, OneDrive, Dropbox, and even having an external storage system. I'm sure if you spoke to people around the room, they would help you set up a system where they can dial in automatically and take data off your system at 3 o'clock in the morning and store it off-site for you, so therefore the data's being protected. Invoicing. People do invoices and they just keep churning out invoices and they keep getting paid. Well, if you've got a lot of income and you want to reduce that, maybe you might forget to do an invoice in late June and you do it in early July. So therefore you do the invoice in early July and that defers the income tax implications until the following year rather than in the current year. Adjust your stock. People need to do inventory analysis. So it's a fast-moving stock, is it slow-moving stock, or is it inactive? And if you've got inactive stock sitting on the shelf, you've got to count it every year, you've invested money in it, possibly it's taking up warehouse space if you've got limited warehouse space. So you need to think about getting rid of some of this inactive stock. Perhaps, either sell it off at auction or write it off if it's stale or inactive stock. I wanted to talk about accounting systems and how I believe they save time and they save money. A lot of people still use spreadsheets. They still use an Excel spreadsheet. And I heard today that there's even people out there, heaven forbid, that still use 20-page column ledgers. I'm aghast. I learnt about 20-page column ledgers in 1975 when I did accounting at school. There's much smarter ways to manage your business, and these are just half a dozen business applications that are out there that will save you money and save you time. Then there's also a plethora of add-ons that will also save you money. They're not the only options, so these six are not the only options. As you can see from the slide, there's even 3 options in the QuickBooks range. So there's software out there, everything from managing simple payroll to simple cash books to complex systems. And then there's even, when you outgrow your zeros and you outgrow your MyObs, you can even go to an ERP system, a more sophisticated system like Attaché, for example. Then we talk about add-ons. There's some time savers out there. So the first ones we talk about is managing our bills and expenses. So there's products like Receipt Bank, HubDoc, Auto Entry. So you get your phone out, you get the receipt, you take a photo of the receipt, it uploads it to the cloud, you then log onto the system, you acquit the receipt, and then send it into your accounting system, and then that's it. You screw up the receipt, you throw it away. So the cloud has it in your software, in your attachment, but it also has it in your accounting software. So by doing that, you're putting it into the cloud. You then also free up the fact that you've got a receipt and you don't have to store it. You don't have to keep your records for 5 years in an archive box somewhere in the back of the bedroom, or suddenly work out that you've got to move them out because I can get rid of all that box and I'm just going to replace that with the next financial year. And honestly, people like Receipt Bank, Auto Entry and software companies, they've got huge servers. A server this big has a massive amount of storage space. And so you just imagine rooms with boxes that look like that compared to the boxes that you've got at home of all your archive boxes. And that's only 5 years worth of archive boxes that you've got to have. So something like Receipt Bank will cost you around $33 a month for up to 50 items. So 50 items is, 12, 13 items a week. So that's your fuel receipt, your bill, your petrol bill, your telephone bill, suppliers' bills. So for 50 bills, that's probably not too bad. And that's going to cost you $33. What's the savings? Well, you don't have to get that receipt. You don't have to enter it into this accounting software. You then don't have to photocopy it because it's a thermo receipt. You don't have to staple the receipt to the paper and then put it away and then hope that you can know where you're going to find it, because once you scan it and put it up into the cloud, then you can pretty much guarantee that you can go and find it on the cloud because that's where you left it last. So for our tradies out there, we've got 2 products that I recommend, ServiceMate and Tradeify. So basically it'll allow you to create a job, it'll allow you to create invoices, quotes, and it'll allow you to convert the quotes to jobs. And it runs like a little calendar system. So you put in where the job is, you put who's in charge, you might allocate a team to that job. And then the beauty of that is that once the job's finished, you then say, right, job's complete, and you say, I want to create an invoice, and it creates the invoice in your accounting system. So the ServiceMate will talk to the zeros, ServiceMate will talk to QuickBooks. That can cost you as little as $29 a month for up to 50 jobs. So again, if you're a business that's doing more than 13 jobs a week, then congratulations, because you're probably on target for, you know, $150,000 a year. And they range in price up to about $350 a month. So there's probably businesses out there that have that high end, but then they've probably got dedicated admin staff and they've got 2 or 3 tradies. And I can imagine that someone like an electrical company that's got 4 or 5 vans, you know, you want to know where the van operator is at the time, you want to know when he's finished this job, he wants to go on to the next job. So he's got an app on his phone, he says, right, well, you know, you've got to go around to Mr Andrews' place, be there between 7 and 9, and then when you finish there, I want you to go around to Mr Hutchinson's place between 8 and 10, and so on and so forth. So the tradie is there, once he's done the job, he says, job's finished, comes back to the front office, they then convert it into an invoice, and then if you've got the tradie out there with your tools to take payment, then it's even better, because it closes the loop out altogether. If you're running a payment system, which sort of was a nice segue, so you got your tradie out there and you tool him up and you give him something like Square or Stripe. So he's got a little app on his phone that punches in the details from the credit card. He's got his little swipe box that goes on the end of his phone and he puts the credit card through there and he gets you to put in your PIN and suddenly the bill's paid. So from the time the work's done to the time you're paid, that's all done in about an hour. And all of that information goes directly into your software system. PayPal is just another method of taking money. You know, the PayPal has fees, but so does Easy Debit. I believe that eBay are moving into that space as well, the ability to be able to raise an invoice and have a customer pay through eBay that'll eventually come back into the accounting system. Managing your inventory. So we talked about businesses that are inventory intensive, a retail store, for example. So you've got tidy stock and you've got box storm. Then you've got things like human resources. So having T-sheets or deputy is great because then you know what people are working on, and it works well in the accounting and the bookkeeping industry to have T-sheets because we can allocate a job and we know exactly who's working on what system. Now we come to our friends, the tax office. Has anyone had any interactions with the tax office? Just a show of hands. I think we all have. We're either pay-as-you-go earners or we're business people, or, you know, and if we're business people, we've got things like BASs, income activity statements, tax returns. If we're an incorporated body, we've got to do company returns, we've got, you know, trusts and all the other business. So what issues are the ATO concentrating on at the moment? Well, they're obviously concentrating on compliance. So they want you to put your form in and they want to get the money. How does that translate to saving? Well, if you put your form in on time, then they're not going to charge you. Like, you need to do your tax return. If you don't do your tax return, they're fining people up to about $1,100 for every return for every year that's not lodged. So that gets expensive because that's cutting into your refund money. So there's probably one cardinal rule. The cardinal rule for the ATO is it pays to lodge on time even if you can't pay on time. Okay? They want you to put the forms in. They want you to do your BAS and income activity statements. They want you to do your tax return because then they know exactly what is going to come down the pipeline in terms of payments. So if you get your form in and they know that form's done, then they're also going to save yourself compliance fines. And they get pretty hard. So a lot of businesses make the mistake of not lodging on time because they fear that they can't lodge the form and then pay for it. Well, my response is you need to lodge the form and then worry about the payment arrangement. The tax office will always entertain, or generally they may entertain a payment plan. But they don't like having a payment plan and that payment plan not being met. They don't like having a payment plan in place and then you turning around and saying, oh, I need to have another payment plan because I haven't got the money to pay for this or I haven't got the money to pay for that. So when you put a payment plan in place, you need to make sure it's over the longest period of time with the smallest amount of repayments. Because I can guarantee in another 3 months when your next BAS is due, you've got to find maybe $3,000, $5,000, $8,000 and pay for that. So you need to think about what's going to happen, not this quarter, but maybe the next quarter or the quarter after that. So there are several penalties. There's separate penalties for not lodging a form on time, and there's another penalty for not making a payment on time. So even if you can't afford to pay it, at least get the form in on time by the due date, and the due date's available on the website, or talk to your accountant or your bookkeeper and they can help you with your time extensions if you need. If you have to, arrange an extension. Let the ATO know what's going on, because if they know what's going on, then there's less likelihood that they'll impose fines. That's not to say they won't, it's just less likely. Okay, there are several penalties. So at the moment there's administrative penalties. An administrative penalty might be, for every day you're late, we're going to fine you, every week you're late, we're going to fine you $250 up to a maximum of $1,100. So there's a penalty for failing to lodge a return or a statement on time. So get your BAS in, get your tax returns done. There's also a penalty for failing to withhold the correct amount of money under the PAYG scheme. So PAYG is pay as you go, the old income tax for employees. So if you don't withhold the right amount of money, then they're going to come after you for that. There's another penalty for almost all of those other tax obligations that we have. Capital gains, fringe benefits, tax returns, as I said earlier. There's penalties around superannuation, and there's also a director's penalty. So a director's penalty generally applies to incorporated bodies. So that's your companies out there. Most people would know that a company has a limited liability. So in other words, a company is a stand-up business. It's not Michael, it's not Cameron. It's a business entity that stands on its own. So let's say Thomas Proprietary Limited employs people and he forgets to do superannuation or payroll tax or BAS. What can happen is Michael thinks he's impervious. Michael's the business owner of Thomas Proprietary Limited. He thinks he's impervious because he's got this company. And that company is protected because no one's going to come after it, because I've got the incorporation, the veil of incorporation, they call it. Well, a thing like a director's penalty is an administrative penalty that's issued by the tax office that can pierce that veil. So they want to go through the business and they want to find out who the director is, and they want to make the director accountable and responsible for paying the debts of the company. So the incorporation veil is great because you can sue me, I've got no assets. But if they pierce the corporation, they'll go after your house, they'll go after your holiday home, they'll go after your boat, they'll go after the money that you just transferred to your wife. They'll even go after the money you transferred to your wife 25 years ago, because they would say that there was this foreseeable problem with a solicitor, for example, and this is what I'm talking about, a solicitor. Solicitor transferred the house to his wife, and then 25 years later he didn't do his tax return, and they went after him, and they went all the way back and got the house from the wife from all those years ago, because they saw that he was moving the house into his wife's name to avoid a future obligation. So in terms of dealing with a debt, if you've got a debt with the ATO, ring them up. I've lodged my form, I've got a cash flow crisis, what am I going to do? They'll say, okay, well, we've got a couple of options. Mortgage your house, sell your kids, or we'll enter you into a payment plan. So you enter into the payment plan, you come up with an agreed payment plan and you stick to it, and you make sure you stick to it. Because if you fail, then they say you go back to jail, go back to $200, and they start all over again. You could also refinance your ATO debt. You could go to the bank and say, I want to borrow money. You could get a credit card and say, I want to pay off $10,000 on a credit card. So there's a number of ways. If you don't deal with that debt, ultimately the ATO can go and garnish your money. So you're sitting there and you've got money sitting in your personal account, you've got money sitting in your business account, and the business owes money to the tax office. They don't just look at the business account, they say, oh, okay, let's go over here and have a look at what Mr. Thomas has got in his personal account. Next thing you know, they do a garnishee letter, goes to the bank, and the bank's taking money out and paying the ATO. And then you ring the bank and says, why is there $1,000 missing? Because we've got a letter in our hand from the tax office that says that's been garnished. It's been taken out of your account. Any account that's got money in it, as far as the tax office is concerned, it's available to be pilfered from, whatever. Okay, I want to talk about the $2,000 instant write-off. Okay, we talked earlier about buying stuff worth $20,000, for example. So you want to go and buy a new trailer. You've got the old 6x4, 7x5 box trailer, and it's looking a bit ratty. And you think, right, well, I'm going to go out and buy a trailer, and I'm going to put the ladder racks on the top, and I'm going to get bins on the side where I can put me brushes and me rollers and me drop sheets. Particularly, I'm talking to the trade in the house. You can go and buy an $18,000 trailer, and you're then in a position to be able to write the value of that trailer off. Under the old rules, because anything that was over $1,000 had to be depreciated over its useful life. So something like a trailer might have a 12 or 15 year useful life. So you go and buy the trailer, and then you say, right, well, I'm going to depreciate that over 12 or 15 years. Under this scheme, under this instant write-off, you can go and buy your $18,000 trailer, and if it's to your advantage, you can write that trailer off in the first year. You don't have to wait 12 or 15 years to write it off, to depreciate it. But as I said to you, don't forget that even if you're paying a marginal tax rate of 30 cents in the dollar, to go and buy an $18,000 asset, you're only going to get about $5,400 back out of that $18,000, because that's what you're going to save in tax. You don't get the full $18,000. You don't have to use the instant write-off. You might say, well, I don't want to use it because I've only got a $20,000 income, and by the time I take $18,200 out as tax-free, I'm only going to get taxed on $1,800. So there's really no advantage in trying to claim a $7,000 tax deduction if you've only got $1,000 that's going to be looked at. So you can not use the accelerated depreciation, and when it gets to $20,000, you can depreciate it in other ways, what they call a low value pool. From the 1st of July, it's supposed to have reverted back to $1,000. So that's the threshold. Anything over $1,000 was the useful life. So then down here is an announcement made by the Prime Minister on the 29th of January that they're looking to increase the legislation threshold from 20,000 to 25,000, and they want to change it from the 30th of June 2019 to the 30th of June 2020. At the moment, that legislation's still not in law, and there's a big risk that it probably won't get into law because we've got an election coming up, and there's about only 2 or 3 sitting days left of this calendar parliamentary session. So at the moment, if you've got anything that you want to buy and you think it's at an advantage, a tax advantage for you, then I'd suggest that you still go and buy it. But if it doesn't present a tax advantage, and sitting down with your accountant and bookkeeper will help you work that out, I'd probably say don't buy it unless it's absolutely necessary. So if you can patch up the trailer, even if you spend $2,000 or $3,000 patching up the trailer to get another 5 years of useful life out of it, that's probably a better investment than spending $18,000, because don't forget, when you spend $18,000, you can't spend it on anything else. You can't buy materials, you can't put it into superannuation, you can't pay employees, it's gone. The other big thing on the horizon is single touch payroll. Single touch payroll has been in place for businesses with more than 20 employees from the 1st of July 2018. From the 1st of July 2019, it's going to affect all of those businesses with up to 19 employees. So what does this mean? STP, single touch payroll, means that when you put a pay run through the system, every time you hit that button to approve the pay run and finalise it, it will send information off to the tax office to know what employees have been paid, how much they've been paid, how much taxes should have been withheld, and what their superannuation calculations are. So instead of waiting for up to 12 months or 14 months to get information to do a group certificate or a pay summary at the end of middle of July, the tax office will know sort of week to week, fortnight to fortnight, how much income tax they can expect to be collecting from businesses. Micro businesses. Micro businesses are those businesses that have less than 4 or less employees. And there's some software companies out there, in particular Xero and QuickBooks, just writing payroll software. So you can still run your spreadsheet for your income and you still run your spreadsheet for expenses, but because payroll is such a specialist area, you've got tax tables, you've got superannuation calculations, you've got a whole raft of things, managing people's annual leave, long service leave, sick leave. So small packages are going to become available for those micro businesses. They're going to cost probably about $10 a month compared to some software. I was going to do a brainstorming activity, but for the purposes of the video, we probably won't do any activities. We'll ask questions at the end of the thing. So what I want you to think about, though, in terms of your business normally is you need to sit down and think about your business plan and your marketing plan. Where have we been? Where are we now? Where do we want to go in the future? People who failed to plan, plan to fail. That's probably something to live by. So how are you managing your business at the moment? What's happened in the past, what's going to happen in the future, and what's going to happen in 5 years' time? Do you want to have this business so you can build it up and sell it? And as someone said to me today, they had a business and without software, they would have been out of business in about 2 years. But in the space of 5 years, they've turned a business around and they now have a $20 million asset that they can sell just by implementing software so they know where they're at. So if you're talking about trying to save a few bucks by not buying software, or you worry about the cost of a subscription being $80 for MyOb or $60 for Xero or $35 for QuickBooks, then have a think about how you're currently managing your finances and are you getting the best bang for your buck. Because if it's costing you nothing and it's giving you nothing, then you're getting exactly what you're paying for. Think about management. How can we enhance management? We talk about employees being our best asset. Well, they're not an asset. An asset is a future benefit as a result of a past transaction. So we didn't buy them, we didn't pay for them. What we've got is the nucleus of how our business runs. Because without employees, you can generally guarantee we're not going to have many customers. Without customers, we probably don't have a business. So it becomes a bit of a circle. So if you've got a good manager, lower level manager, someone that you can trust to open the store of a morning or shut the store of an afternoon or take your money to the bank, or perhaps being a team leader, then have a look at that and take the responsibility, give it to them, give them the responsibility and the accountability, and it probably comes with a few bucks. But again, there's a return on investment because you train them in the way that the cost of replacing the employee far exceeds the value about rewarding good employees. Slow to hire, fast to fire is another good edict at this point. So get good people, pay them good money, and you'll get good return on investment. If you're going to pay shit, then you get shit. And again, not a good ROI. Cost of management versus the status quo. We do the things the way we've been always doing, you always get the same result. If you perk it up and you do things a little bit different, then you guarantee you're going to get a little bit of a different result. And I say use a computer to capture the comment and ideas. Perhaps you're lying in bed, get the iPhone out, get the tablet out, and just jot a few ideas down. So then you don't think about stuff in the middle of the night. You've got it there, you can write it, you can get up in the morning, you can deal with it. I was going to talk about a one-page action plan. So where is the business at the moment? Where will the business be in 6 months' time? Where will we be in 12 months' time? Where do you want to be in 3 to 5 years' time? So you need to sit down and critically analyse and say, okay, well, where are we at the moment? What can we do to improve it in the short term? And then we move on to some long-term objectives and long-term goals. Again, I'll go back to that saying, people who fail to plan to fail. You need to work out where you've been to know where you're going. And then there's some more complex issues. So we've got to deal with training, recruitment, improving customer services. We need to increase sales, increase our cash flow to reduce cost, and we also need to think about broadening our customer base. So there's some strategies on what we're going to do, when we expect we're going to get them done, and most importantly, who's responsible. Because you can't be all of these things. You can't be the sales manager, the finance manager, the marketing manager, and the IT manager. You have to possibly outsource some of these things, because some of these skills you have and some of these skills you don't have. So, in terms of this, the one-page plan is a simple tool where you can set aside goals for your business and note down actions that you will take to achieve these goals. The plan is simple to use. Once you've completed it, post it up somewhere where your staff and yourself can view it regularly. Put it in the meeting room, put it up on the fridge in the kitchen, put it on a notice board. Goals and actions should be in front of mind for everyone involved in the business, because they're all part of the business, from managers right down to the floor sweeper. They're all about what does the shop look like, what does the business look like. Okay? So we talk about coming up with an idea, then we come up with a plan, then we have a strategy to implement the plan, then we market the plan or we implement the plan. Well, does it come with $1? Generally things come with $1. Then we have plan realisation, and then we have success. And then we go back and that becomes a cycle. In business improvement all the time. So in terms of implementing it, you can be all those people. You can be the IT manager, the customer's responsibility, the finance manager. You could do it all yourself, but I guarantee you that you're probably not going to get a lot of sleep if you do all those jobs yourself. You could have someone inside your business do it. We just talked about encouraging workforce participation. You know, escalate someone up. Get someone to be the person that's responsible for coming at 6 o'clock to open the store up, to do that batch of muffins or that whatever they've got to do. Have someone responsible at 9 o'clock at night to close the store down and count the till. Because if you're there at either ends of the business, then you're pretty much locked into that business. Alternatively, there's some things that you can outsource to a third party. So you could pay someone to recruit staff, because there are HR experts out there that'll help you recruit people. You could pay a social media person to manage your LinkedIn page, your Facebook, your Twitter, your Instagrams, and Pinterest, I think it is. You could engage a part-time bookkeeper, a full-time bookkeeper, a part-time accountant, a full-time accountant to manage your finances. So what are you good at, and what are those things that you're not so good at that you possibly would like to get rid of by outsourcing them? So in terms of summing up, we've got a list of a few dollar-saving ideas. So the question was, how can we save $500? Well, I've helped you spend some money, because I helped you with your $20,000, and I've worked out that that's going to save you about $7,300. But you need to sit down and have a chat with your accountant. You need to talk to your accountant quarterly, if not quarterly, maybe every 6 months. A lot of businesses don't go and see the accountant until after the end of the tax year. And by that time, it's already too late to implement things this tax year that has a benefit to your tax return. So if you don't meet with your accountant, you'll never know about things like accelerated depreciation of assets. And let me tell you, there's about probably 60% of businesses out there don't even know about accelerated depreciation. Do what they tell you to do and not what they don't tell you to do. So in other words, if they say you should do something, it's not because they like the sound of their own voice, although sometimes we do. What they're saying is they're trying to improve your business and improve the bottom line and add value to your business. You need to manage your receipts and bills. You know, we've already talked about a storage box for 5 years. Imagine if you extrapolate it because you've got like 200 transactions a day. How much storage space do you need? I walked into Chemist Warehouse the other day and I looked up, and on the back shelf was all of their documentation for the number of years. You know, is that what you want in your business, to be able to walk into a business and see all of your storage records on the top shelf? You know, and I worked in Townsville. We used to have this room, and it had a padlock on it. And the only time we went in there was after the end of the financial year, when we were trying to take all of the old files in that we closed off. Well, let me tell you, when they wanted to knock the whole building down, there was a headquarter building and our storage space, there was crap in there that was literally, you know, bird poo, rat poo. Yeah, so it was unsavoury, untidy. And then someone's going to come along and they're going to say, can you show me the receipt from December 12th, 2014? And you're going to go, holy cow, Batman. So your software, your receipt banks, your auto entries, your QuickBooks, your Xeros, You just go and pull up the transaction. What was the dates? Yep, pull it up. What are we looking for? It's a Bunnings receipt. Well, what did you buy? Well, there it is there. A fuel receipt. Point to you. How many times do you go into 7-Eleven? Oh, I'm just going to get a bottle of water. Just going to get a packet of smokes. I'll just pick the newspaper up. Comes to a bloke like me and I say, no, yes. The petrol is the only thing I'm interested in because all that other stuff is personal, domestic or capital in nature. So when the taxman comes in and says, oh, you spent $160 on fuel, yeah, mate, I drive a 4.2 diesel. Well, show me the receipt. So there's the receipt. Oh, crap, $1.52 for diesel and you only put 35 litres in. Just having that at your fingertips is just going to save you a whole bunch of grief down the track. Keep your records up to date. If you don't know where you're at in terms of finances, who owes you money? Who do you owe money to? Ensure you stay compliant. Get your tax return done. Get your BASs done. Get your superannuation payments done. Understand your business. Know your business. Review it periodically until it becomes second nature. No surprises. You don't want any surprises in business. Set goals and objectives. So work out about maybe it's a new market we want to attack, if I could use the example over here. So we've got this business, but we're not sure that there's a certain part of the market that's been tapped into. How can we develop a plan that taps into that market? Turn ideas into reality. Don't just write them down. Just don't think, oh, that's a great idea and we'll do that. Write it down and start implementing it. How are we going to do it? How much is it going to cost? What's the benefit we expect to get out of it? Can we measure it? And so hopefully from tonight you've got a few ideas, and I know it's a very broad brush presentation, but even if you just take one or two ideas away from tonight, you know, investigate software. And I know you guys have already got plans in place to investigate how you can explore a market. That's a great thing. You know, think about the market that you want to attack, work out how you're going to do it, and then implement the plan. So, these are my contact details. Here's my email address, michael@oata.com.au, and my phone number's up on the board. Most people know my phone number. So if you've got any questions or you've got any other interest in perhaps some one-on-one, come and see me, have a chat to me, give me a call. And the last slide is just some advertising for upcoming events. So on March the 27th, in here after the next committee meeting, we're having online presence for business presented by Felice. And then the following Wednesday, we've got a double header. So it's like movie night where you get to see two for the price of one. So I'm going to be presenting more information on the tax workshop and also single touch payroll. So if you've got any questions and you want to come along and you particularly have questions, the questions you have may be questions that other people have about tax and single touch. And if I can't answer it, I'll take it on board and then get back to you with a response the best I can. And on the same bill, following mine, or maybe I'm following her, is Facebook Introduction to Business. So again, we're targeting social media. How do you get your presence online? So thank you for the presentation. Are there any questions? Has anyone got any questions? Steve?
With QuickBooks, does that include where you can take the photo